You want to know the quickest way to pay off your mortgage? All you need is one simple strategy to make this work. I just showed a client how to take his 25-year mortgage and pay it off in 6 years. We're also saving him over $120,000 in interest. No, we're not making any bigger payments, putting more money towards the mortgage, changing our financial budget, or doing anything different. All we're doing is using a better mortgage strategy to make this happen. And all we're using is a first lien HELOC. Unlike a 30-year fixed mortgage where you beg the bank to save money on a mortgage, this puts you as a homeowner in total control of your loan. One of the biggest differences with this loan is how interest is calculated. So instead of your traditional 30-year fixed mortgage that's amortized, this loan calculates interest on a daily basis off of the unpaid principal balance. So as your balance drops, so does your interest calculation every month. Let me show you what I did with this client. So here's his current mortgage. He owes $733,000. His house is worth a little over $900,000. He's currently at a 30-year fixed mortgage at 3%. He's had this mortgage in place for 5 years. Because we use our HELOC as our checking account, we've got $19,000 that's going to be going in there every single month. We're going to reallocate $100,000 that he has in checking and savings. We're going to deposit that money into the line of credit. Now remember, the HELOC gives you access for 30 years. A lot of people hear this strategy and they think you only have access for a couple of years. That's a traditional HELOC. This is not your traditional line of credit. This is a first position HELOC. So again, even though we're putting $100,000 into this line of credit up front, he still has access to that money in case he wants to invest or put the money towards another vehicle. So we've got $19,000 going in. We're going to pay all of our bills and expenses. And at the end of the month, after everything's covered, he's got about $7,600 left over. Here's the loan. He currently has 25 years left. He's going to pay back a total of $1 million if he never refinances or modifies his mortgage. We're going to take that same balance, pay it off in 75 months, saving him a total of $125,000 in interest. The average interest rate on this loan is 8.3% that we're using to model this scenario out. But because, like I mentioned earlier, interest is calculated on the unpaid balance every month, we're only paying $184,000 in interest, which gives us an effective APR of his mortgage of 1.55%. And the beauty of this loan is that you can see here in 75 months, under the loan balance, we owe absolutely nothing. He can stay in his current mortgage and he would have only paid down $135,000, still owing $598,000 on that same balance. That's how you pay your home off faster without having to change your lifestyle. So if you're still married to your mortgage, I can get the divorce papers ready, show you how to do things like this, pay your home off within a few years, and beat the bank at their own game. If you want to learn how to do